Okay, we are recording with Mark Jeftovic. Am I saying the last name properly?
You're Croatian. You should be able to get it.
Repeat it for me.
Well, I always just Canadianized it to Jeftovic, but I'm used to hearing Jeftovic.
Jeftovic.
Yeah.
Got it. Serbian?
Dad born in Dubrovnik.
Yeah, okay,
which
got
is
it.
Croatia.
Just Croatia,
but
yeah.
he grew up in England.
Grew up in England.
Yeah.
Moved.
His family moved there when he was 9. And then...
You told me that before, and I forgot. What a nice place to be born. I'm like, God, do a bit of an cult.
Yeah, I had no idea. So we were there last summer, and...
It's a nice place. It's a nice place. I don't want anyone else to know. Mark, I'm tired of more people know. Before I wanted people to know because I'm like, why don't people come here? It's so beautiful. And now there's too many people coming there. So I've totally flipped.
You hear Yugoslavia and you think like gray Eastern European, former Soviet Republic, like Canada in November all year long. And then you get to Dubrovnik and it's palm trees and it's 30
It's beautiful.
It's
like a secret. Yeah. We were there when the war broke out there in the early 90s, and they actually knocked on our room in the middle of the night. We were traveling on Canadian passports, but you know, my dad's obviously born there. He's Croatian. And they knocked on our door in the middle of the night, like 2 a.m. and said, hey, you're Canadians. You must leave right now. And, you know, there was no internet then. Yeah. So it wasn't until we went through like 3 airports and then we got out to France that we opened the papers, and it was like civil war had broken out. And
oh my!
It was we saw our father running through the airport in Belgrade, and it was the first and only time I had seen fear in my father's face, because there was army soldiers in the airport kind of organizing. The tarmac was full of just like tanks and things organizing. I guess that was like an organization spot, obviously, at the airport, and planes kind of getting together. So yeah, it was just a weird time, but we didn't know we kind of knew what was going on, but you didn't really know what was going on. So looking back, it's funny how information traveled so slow.
Yeah.
You know, compared to what we are now. And that's what I think I wanted to talk to you about. How are you trying to get your mind around this whole AI thing? Where are you at? Like,
we were just talking about that. So as I was explaining before we rolled the camera, I have this kind of neurosis around it, or anxiety, that has nothing to do with, oh my God, I'm going to be replaced by this. It's more like there is now so much possible that I am only really denting a scratch on the surface, and that causes real anxiety in me, because it's like I cannot move fast enough to actually get hold of this new technology to sort of leverage it and maximize the opportunities that are there. I don't believe AI is intelligent or self-aware or sentient or anything like that, but it is a breakthrough in natural language processing. So it's going to change everything, even in how we interface with technology. Like someday coding isn't going to be, you're not even going to have keyboards, right? It'll be like me talking to you right now.
Make an application that does this, and this.
Exactly. And I've already been doing that to a certain extent with just ChatGPT and Super Chat, just kind of like hold down the key and say, okay, rewrite that function to do this for me. And then I kind of walk away and pour a coffee and it's doing it, and I copy and paste.
What's Super Chat? Different one?
It's just like an overlay for ChatGPT. So it's just a browser plugin, but it helps me organize my different threads of all these different things I have going, and search inside all my chats and preserve them and that kind of thing.
I think first moment I remember back in the late 90s is when someone pointed Google out to me, because before I was at Oracle, I was using like Yahoo, Alta Vista, Dr. Jeeves. What were some of the other ones? I forget. There was another big one. Anyway, as a search engine, and they were more like directories that you could kind of search.
Yeah.
And then some tech guy was up from California in our office here in Mississauga, and he kind of just came by my desk and he's like, oh, search that up. And I went to whatever, Yahoo, and he's like, oh no, go to this thing called Google. And I went, it was just that white screen, which is the little text box, and I typed in, and the search results that came out, like, you know when you have that moment where you're completely just stunned by the tech? I just was stunned that the results were that accurate and that quick. And I never went back. And then I had this moment with ChatGPT recently that kind of reminded me of that. I've been using it for all sorts of things, different calculations that somewhat scare me, by the way, because if I'm getting it to figure out some math, I'm like, I hope this math is right. Like, do I have to like double check?
That's
I have to double check the math because I'm using some of this math in some presentations and stuff. And I'm like, do I have to sit down and like check this math?
It gets stuff wrong.
I've noticed that.
And it has good days and bad days. So it's like people are talking about, well, this is going to replace everybody. It's like, well, you're kind of, if you do that, you're replacing a human that has ups and downs and frailties and strengths with a machine that's even fuzzier than a human. And so, because a human at least has a personality that you come to know over time and you can sort of like adjust for it. Like it's like, oh, it's the Friday before the weekend, so I'm going to put this task over here instead of over here. But with these machines, these neural nets, they're flaky. One day they're bang on. The next day it's like, you're just not getting this. You're just totally not getting this, and there's no personality to it or ability to adjust. It's just some days it's completely off. And the thing I notice, my wife and I both use it for our respective things. She writes mystery romance novels, and it's funny because when we talk about what we're doing, what we're using AI for, we either both say ChatGPT was retarded today, or we say we had the most amazing interaction with it today. So
it does have like on days and off days
across the whole system.
Yeah.
Well, I mean, it's two people, but
depending on what servers you're hitting or who knows what you're getting.
Yeah.
And the freaky part for me is when I'm searching it, and one day I asked it something and it said, well, with your real estate experience, and I was like, whoa.
That happened to
me. That was the moment that like backed me off. So then I asked it, I'm like, wait a second, in your answer, you're mentioning my real estate experience. How do you know that I have any real estate experience? And then it went on to say, well, based on the conversation we had earlier, you said this, and this. And I thought, holy shit. And I don't know if I guess maybe I didn't start a new thread, or I don't know how it had that. I thought I was always clearing the thread, so it had no memory of my previous conversations. But that completely freaked me out because I thought we're going to come to the day where I can just dump in all the newsletters. We publish a 12-page paper-based newsletter, Mark. Paper. I know. I love paper. I know you're shocked. And I just thought we've had these since 2008. I'm like, can I just dump in all the newsletters we've ever written? And this thing is going to basically know my opinion on everything. Or if it doesn't know my opinion on a new question, it's likely going to know the patterns in how I would answer such a question.
I already do that with Claude, right? So I've got a project set up in Claude for the Bitcoin capitalist, right? And I only do this for the mid-month portfolios. The monthly macro letter is just kind of me shooting my mouth off. So I just kind of let it rip. But the mid-month portfolio, we cover those 10 companies in the portfolio, and I find that a little on the tedious side to just like, okay, how many Bitcoin did Marathon mine this month, right? So I have all the previous years. You can't dump unlimited stuff in there. So I have the previous year's portfolio update in there, and then John, my researcher, gives me his research notes before I sit down to write the thing, and I upload John's research notes, and I say, okay, give me the Coinbase section for this month, and it will give it to me in my voice using my style, and then I will go in and
change up what you need to change up.
It's not there yet in the sense that it waxes it tries a little too hard to get your voice. So like after you know how there's that joke that ChatGPT uses the word delve a lot. So I'll do this with Claude and it'll say, which reinforces our monetary regime change thesis. I'm like, you don't have to say that.
Every answer.
We already know that. That's why we're all here. But yeah, thank you. How many Bitcoin did Bitfarms mine?
So, and is it saving you? Like you can
it's saving me time.
It is
because I still write like the intro pieces, but it's just the individual company pieces can take me a long time just to sort of like tease out, because John bombards me with information, all quality information, but I'm like, okay, I got to pull out what's relevant here, and then I have to match it against. And then I can do things like, okay, give me a bar chart of everybody's Bitcoin production and hash rate for the last month, and it just does it.
So the value of the Bitcoin capitalist, so for those people who don't know, how often is that published?
So it's 2 issues a month, like the macro one and then the portfolio update. And then there's trade alerts or breaking news in between and special notes.
To me, this is all the value going forward, because information processing, we've already been here, but I think we're taking the next leap, is that the information curator is now, to me, the person of value. Because if I trust Mark and his opinions, if we're all just swimming in a sea of information and AI is going to give us access to all the information, I wonder if there's just going to be, more of an emphasis on people I trust. Like, oh, I trust Mark, so whatever Mark says about these subjects that I know I like to hear from him on, to me, that's where we're going. And then I'm just going to outsource my information curation to you. And maybe that completely gets replaced by AI at some point. But right now, when no one knows really what to trust, you still need that kind of human who might be using AI behind the scenes to do the information curation for them. But it's almost like they're the filter. They've approved of this message. They send it out. I get that email from Mark or that newsletter from Mark. And I'm like, okay, here's the information I can kind of trust. And the value to me of a good information curator is everything right now.
Yeah, it's a combination. The value is in the filtering, the curation, and then you have to have that analysis on it, which when will AI get there? I don't know, because, I've had base core investment theses or ideologies behind the Bitcoin capitalist stuff for a couple of years that is finally kind of starting to be borne out now. Like I said back in 2021, the Bitcoin market cap will be driven by a bond exodus over time. Nobody was saying that. I'm not taking credit for it. I just mean like only very isolated.
Yeah, in 2021, no one was really talking about that. Very
fringe cranks out on the edge were saying.
Yeah, people like you.
Yes,
people like you.
And then now,
that is a compliment.
Now, no, well taken, right? Like, and then now.
Michael Saylor is putting it into play.
Yeah, the Fed cut rates and the yield, they're losing control. They're losing control over the long end of the yield curve, and everyone's going, bonds are messed up, right? I almost dropped an F-bomb there. I don't know if I can.
You're allowed to fucking swear and do whatever you want. So let me just get this on the Bitcoin Capitalist that you publish twice a month in two different ways.
Yeah,
correct.
Well, they're all PDFs. They're like 30 to 50 pages, old school.
Okay. What is the core thesis that you've had in this? Like, is there principles that drive
So it's sorry, I cut you off. No. It's basically, I call it the monetary regime change, right? So we're undergoing a process of hyper Bitcoinization. There's going to be the world's largest asset class is bonds, and bonds are denominated in fiat currency, and fiat is dying. So if only 1 or 2%, like if there's a 10% bond exodus, and only 10% of that exodus, so 1% essentially flows into Bitcoin, it completely changes the dynamics of the Bitcoin market. But I think
I'm trying to visualize Michael Saylor's chart that someone on the internet, someone on Twitter put it together, where he has all the different asset classes, the big financial ones laid out, and it's currently altogether globally, it's a $900 trillion market, and bonds of that make up, I want to say like 330 trillion of that or something.
And Bitcoin is like 2 trillion.
So basically what you're saying, if 10% of the bond market of 330, that's 33 trillion, decides to look for a new home, and they conclude that Bitcoin, 10% of the bond market goes to Bitcoin, it blows Bitcoin up
if only 10% of the 10% goes to Bitcoin.
Good point.
It adds 3.3 trillion to the Bitcoin market cap. Mm-hmm. Which also
more than doubles it, right? It's sitting at around 2 trillion.
When I first put out, the Crypto Capitalist Manifesto, when I first put out that thesis and I broke out some tables, actually a retired banker out of Toronto emailed me. He said, "You're right, but you're wrong, because it's not linear, because at any given, the entire 19 million Bitcoin aren't for sale at any given point in time." Mm-hmm. So that 3.3 trillion, try to squeeze into whatever, the 5 million that are floating, that would go up as the price goes up, but it's never going to be the full 19 million. So,
and the price is set at the margin, so who knows the value of the Bitcoin?
Yeah, it's just higher, right? That's all we know.
And is there other core principles of the Bitcoin Capitalist that you like to share?
Yeah, I mean, we're not chart traders or swing traders. We're not trying to pick tops and bottoms. Like I'd say, as far as you have your core hodl of Bitcoin, which you should, have an initial position, you DCA, you self-custody.
That's your savings.
That's your savings. The stocks are how we're getting like additional leverage and torque to the Bitcoin price.
And the stocks that you track are what, like miners and this kind of stuff?
Yeah, miners and I can divulge that MicroStrategy, we added that last July.
Yeah. Did you? Wow.
Yeah. So it's been
Yeah,
pretty
so I guess that's been decent.
Yeah, that's been not bad. Not bad. And so what I tell readers is like, we're looking for the next Amazon of crypto. I think there are 3 companies in our portfolio that will be the first $1 trillion companies in crypto. And here I know like we're both Bitcoiners and Bitcoiners have this derision towards the term crypto, but I often use it as just a catch-all label for the whole space. Compared to to the normies, it's all crypto, right? Including Bitcoin. I mean, sometimes I say digital asset space just to sort of capture it all without the stigma, but that's what I mean.
And so what are those companies? Can you share them?
Yeah, sure.
MicroStrategy is one of them.
Yeah, MicroStrategy, Coinbase, and Galaxy Digital.
And Galaxy Digital. That's Novogratz' company. Yeah. And they do what? Are they a hedge fund?
They're everything. We call them the Berkshire Hathaway of crypto.
Because they're just picking up everything.
They have over 200 subsidiaries and units and investments.
Anything to do with digital assets, all the different crypto plays. They just suck it all up.
They're a Bitcoin miner now too, because they picked up a distressed miner during the bear market. The moves that Galaxy made during the bear market were they were magnificent.
Oh, really? Okay.
This is a really well-run, well-managed company. How many other Bitcoin or crypto companies were buying back their own shares with their own money during the bear market?
Yeah, got it.
And buying up whoever was like they had loaned out a lot of money and some people couldn't pay them. So it's like, okay, too bad, so sad. You work for us now. They take over the company, and they just, they had a lot of the Mt. Gox claims that finally
did they
this year?
Okay.
Yeah. And so they're everywhere.
And then Michael Saylor, what he's doing, I mean, for me, I think we talked about this the other day on this podcast, and we were talking that, to me, it feels like he's opened up this black hole where all the value of the traditional markets are getting sucked over into this digital ecosystem driven with Bitcoin.
Yeah.
That it's like a portal that has been opened up that didn't exist before, where somebody who's mandated by their board to buy bonds now has this way to get Bitcoin exposure through MicroStrategy. And I feel like the value of it's almost like you can just see the value of an old system being sucked through this portal of MicroStrategy into this new system. Does it get to the point where MicroStrategy is a threat to the old system and becomes like this national concern? What were your thoughts on this?
I actually thought you were going to say, is there a point where MicroStrategy becomes a threat to the new system because of the...
Okay, I guess there's that too, yeah.
The thought experiment I play in my head is what happens if MicroStrategy gets all the Bitcoin? It won't happen because of market dynamics, but that's sort of the hamster... Sorry, I just bumped my thing. The hamster wheel loop I play in my brain. But... that analogy, I mean, that's the exact analogy I used in the original Crypto Capitalist Manifesto, and I had a freelancer draw.
So maybe then I read it from you and stuck in my brain.
And it was basically these 2 gigantic balloons.
I think I remember that. Yeah. So that's probably where I'm getting from.
And then there's that great reset machine that's just sucking out all the purchasing power and blowing it out the other side. And at the time, the entire crypto space was $1 trillion. Now it's 2 with Bitcoin, 3.5, 4 with everything else. But yeah, I mean, Saylor has made those analogies as well. There's mass triggering going on right now about MicroStrategy, which is kind of fun to watch, right? It's a bit of an adjustment going from always taking the abuse of being a Bitcoiner, you're an idiot, you're a loser.
You went from immediately being an idiot to, you're too smart and you're going to wreck everything.
Yeah, exactly, right? It's I'm not used to winning, right? Hashtag winning all the time, but there's been a lot of it lately. It's fun. I mean, even though we've been in it for a few cycles, but this cycle does feel a bit different.
Real estate investing isn't always easy, but it can be relatively simple. And that's where the Rockstar Inner Circle comes in. Look, there's a lot of real estate investing information out there these days. That's why it's so important to pick your sources wisely. And even though investing isn't always going to be the easiest process, it does not have to be super complicated. That's where tried, tested, and proven strategies like the ones that Rockstar members use come into play. Everything shared in the Inner Circle is built from firsthand, on the streets experience in the current market. It's all up to date, things that people are actually implementing today. In fact, the ongoing courses are delivered live, so they're always up to date with the absolute latest real life experiences. As a Rockstar member, get ongoing access to over 20 different systems and programs covering things like which properties investors like and why, our private rental system, what opportunities the investors are scooping up in student housing currently, the legal side of investing, why or how to use corporations as an investor, a mortgage class with the absolute latest options and programs to build your portfolio as an investor because they're different than a regular home buyer. And there's a whole ton more in all those different classes. Of course, to implement all these strategies, members get access to unlimited private one-on-one coaching with an actual human experienced investor, not an AI chatbot, not ChatGPT or anything like that. It goes beyond training, classes, and real estate. It's a community for people looking to take control of their own finances, to give themselves options and allow them to live life on their terms. With ongoing live and virtual opportunities to connect, it's built for investors by investors. You can see everything members get at rockstarinnercircle.com/member. It's rockstarinnercircle.com/member. Now back to the show.
And so I just want to think this out a little bit. Do you think MicroStrategy can acquire so much Bitcoin that it is a problem? I mean, that's currently what some people are scared of.
I think that because when I think it through, I realize my brain is hardwired to believe that inflation is normal. Mm-hmm. Right. Mm-hmm. So there's a great book, and I don't know if I mentioned it last time I was on here. It's called Paper Money Collapse by Detlev Schlichter, I think was his name. Detlev. And he talked about his first edition of that book came out before Bitcoin was a thing. I mean, it was a thing, but it came out, I think, in 2011, and it hadn't really caught on. So he doesn't mention it once in the book, but he talks about if there was a gold standard and all the objections people have against a gold standard, there's not enough gold, you need more currency units. And he just walks you through the whole book about how pricing would be deflationary, how your money, your wages, your savings, everything would actually gain purchasing power over time. And that 1 unit of gold, if you had 1 ounce of gold to drive the entire global financial system, you could do it because you can subdivide 1 ounce of gold theoretically forever. Now, nowhere is that more true than with Bitcoin, right? So technically, let's say hyper-Bitcoinization occurs, and at the same time, I don't think it's possible, but MicroStrategy buys all but 1 Bitcoin in the world. You could power an entire global economy with that 1 Bitcoin, because on the converse of how central banks can print more and more money and just debase the currency ad infinitum, you can subdivide down further. You can divide a Satoshi, someday they will divide a Satoshi into 100 million sub-Satoshis, or microsats already a thing on Lightning. And then from there, they'll divide a microsat into 100 million microsats. And you could always keep dividing down because everything is just as infinitely divisible. And so you would just have this deflationary pricing dynamic where your money, your savings, your wages would become more, more valuable.
So you've accepted that this is a possibility for an economy to exist in this manner.
Yes.
So that's changed your thinking that it's not bad if MicroStrategy was to absorb a whole bunch. Market dynamics might fix that, where they sell some or it gets out into the economy. Who knows? We can't even predict to the next 5 years looks like, but it's not a threat to you the way you see it today.
It feels like it sometimes, and when I realize that it's just my brain hardwired to think that inflation is the cure for everything, the way like a
I think it took me like 2 years of like thinking about that to understand that deflation is okay.
Yeah. What I would like to see with MicroStrategy is more movement. I know they are doing things, but I'd like to see them building on top of a Bitcoin economy, like leveraging that data analytics business. And they are to some extent, but I think they can.
Maybe we just have to have some patience. Like I remember when Amazon was losing money like crazy in the early 2000s, behind the scenes, like Bezos was building the best supply chain that we had ever, wouldn't any of us would ever see. I mean, even with the Canada Post strike going on right now, I still have packages in my family landing on the doorstep every day, it feels like, because Amazon's bypassing Canada Post and has their own whatever, the last mile coming right to my doorstep on their delivery mechanisms. I'm not sure how it's done. So I just wonder if it's just a little bit of patience, and under the covers, who knows what pops up 3 years from now. But as we're seeing it and studying it, you kind of lose a little bit of patience, and you think like, where is some of this development you want it to happen overnight? Maybe there's stuff happening.
Another example of unwiring your brain on this deflationary stuff. EasyDNS started taking Bitcoin payments in 2014. Sure.
You're good right where you are. There we go.
And I thought, it was just an experiment at the time. I thought I was really fascinated by Bitcoin, but I thought if this catches on and becomes more valuable, the transaction volume will decline over time because people are going to want to hoard their Bitcoin. And to a large extent, people will and do, but people still spend their Bitcoin. So no matter how high Bitcoin goes, here we are, we're on the verge of $100,000 US Bitcoin. I'm still getting payments every day at EasyDNS in Bitcoin.
You are, eh?
Yeah. So I had a working theory, and the data has disproven my theory over 11 years of time frame, right? And my theory, or my explanation for why my theory failed, which was like money velocity would drop as Bitcoin became more valuable. That's what I was worried about, is that it takes less and less Bitcoin to renew your domain name every time. But what I do think happens in the future, whether we like it or not, is I think, and I've been sort of trying to map out like an article or a blog post about it. The era of fiat Bitcoin is coming, right? Where like Bitcoin becomes collateralized by entities, and people are sort of like, I don't know, like, there's one thing to borrow against it to buy a productive asset. Okay, that makes a lot of sense. That's the Hugo Steins play, which is, by the way, what I think Saylor is doing in spades. I don't know if we talked about him last time I was on, but
we didn't.
I think we can get to that in a sec. But over time, you're going to get this sort of pseudo Bitcoin that's sort of built on top of this various different institutions that have this bedrock of Bitcoin. I think that's kind of where things are headed.
It feels like it. I hear more like when you saw Cantor Fitzgerald, CEO, being his name tossed around. I think he's going to be Commerce Secretary, but I think he was at one point going to be nominated for Treasury even in the U.S. But when he's...
Which one was the Cantor Fitzgerald guy? Is it the loot guy or the other guy?
I forget.
Anyway,
but he was on a couple interviews talking about how he owns hundreds of millions of dollars worth of Bitcoin, and that how Cantor Fitzgerald was going to turn into a Bitcoin bank. And then on CNBC, I think it was last week, there was some banker from some entity I had never heard of before saying they were going to lend out on multi-unit apartment buildings a combination of fiat dollars and Bitcoin.
I saw that clip.
And it looks like they were going to use currently the apartment building as the collateral to do the lending, but they were going to give you a little bit more to buy Bitcoin, and then they would get some of that Bitcoin. Part of their fee in the repayment was at the end of, in between 4 years and 10 years, which was the end of the loan.
You noticed it was a minimum 4 year.
Minimum of 4 years, so that they knew, if anyone listening, if you're not aware, over 4 years, Bitcoin's lowest compound annual growth rate is like 24% or whatever it is. So they're protecting themselves there, because in any 1 year, we all know it could go down freaking 80% or whatever it is. But if you hold 4 years, you're good.
Yeah, you're basically, you buy Bitcoin at any price at the top of whatever cycle you're in.
Doesn't matter.
If you can hold 4 years, you're
good.
fine.
But it tests you.
Yeah.
And I know multiple people who bought really near the top and they bought on leverage and with credit lines. And when it went down, they lost faith and sold. And then now it's back up. When it hit about 60,000, because right now we're sitting in the 90s. When it hit about 60, I had a couple text messages come in from several people like that saying, hey, nothing goes up forever. Now's probably a good time to sell your stack.
Yeah.
And I just thought, oh my gosh, you don't even understand how deep I'm into this. You don't understand where my mindset is at.
This is a cult. You're in. Yeah, we're all in, man.
You understand? I'm never selling. But I shouldn't say that. Back to your point, I don't want to get off track on the collateral, but I can see myself with my family. Like, I'm going to be turning 52 in January. If there's no collateralized options that are really enticing to me, I don't know. There's probably a few family things I want to do.
You take some lifestyle chips off the table.
Yeah, and I guess because the value has grown on a percentage basis, to your point, every SAT goes further. So you can see yourself doing it because you're like, oh, well, I got a bunch more. I can't believe I'm saying this right now, but that's
true. I took some off the table in 2017 to pay down my mortgage, right? And then my wife and I was talking with her about it, I guess, earlier this year. So you realize Bitcoin is like now 3x where we took it off the table. And she's like, it was worth every penny.
Yeah.
Because your stress level went down.
But I wonder if that changes to your point because it's obviously going to become the best collateral that anyone can have.
Yeah.
And then I'll never forget when I worked for Oracle, and I guess I was in my 20s, and Larry Ellison came out on some news article, and whoever wrote the article was writing about him and said he had $1 billion credit line. I think at the time he was worth $4 billion. Yeah. Now he's 130 or whatever it is. Yeah. Worth $4 billion, and $1 billion credit line some banks had given him, and the balance on it was like $900 million because he was buying yachts and he was racing the whatever boat racing he does, and he's always doing some stuff.
Yeah,
houses, Hawaii, and all these things. And I remember thinking, what an idiot. I'm like, this guy has $4 billion. Just like sell $1 billion of your stock and clear the credit line.
Yeah.
That was my unsophisticated look at his life.
It's still how I'm hardwired.
Yeah. But now he's worth $130 billion. And I'm like, he just held the $4 billion when it went up to like $15 billion or $20 billion because he knew his Oracle shares, what value he was holding. Maybe he peeled off $900 million then, paid that credit line off, and then got a new credit line because his Oracle shares are worth 15 to 20 and got a $4 billion credit line and jacked that up and then just held the shares again. So there's this weird thing once Bitcoin gets to be used as collateral and you can borrow fiat against it. I'm like, what does the world look like then?
Well, actually, going back to Saylor, which will take us back to Hugo Stein's, Saylor is doing the opposite. He's borrowing fiat by the collateral.
Yeah, he's doing the smart play.
He's going the other way around.
I'm talking lifestyle. Saylor's talking smarts.
Yeah, exactly. And you and I are both come from the old country, right, where debt is evil.
Bad.
Right? Like, don't go into debt. I'm still hardwired. I still want to zap out the rest of my mortgage. And, if I buy a rental property,
on your primary home, I see no problem with zapping out your mortgage. On the place the family lives, if you're going to clear a mortgage, I just don't see a problem with it. But go on. Sorry, I'm cutting you off.
And then on a rental property, it's like, oh, you buy the whole thing and then the cash flow is yours. But actually learning from you guys a bit, a little bit of leverage on a rental property is actually kind of works out better over the long run, especially with the whole way refinancing works and the tax treatment you get and that sort of thing. But it does illustrate this dynamic, which comes back to Hugo Stein's, right? The German industrialist in the Weimar hyperinflation who realized what was happening. He realized that the Deutschmark was hyperinflating itself to zero. So he borrowed as much of it as he could, and he would just buy hard assets. So he went from inheriting like a sort of middling sized conglomerate from his father when his father died to being the largest industrial concern in Germany because he was just borrowing, he was levering up these debasing, decaying Deutschmark, and he was buying shipyards and railways and coal mines and all this stuff. And then he paid it all off like in 1924 or something with, I don't know, he took a gold coin and here he
threw it at them.
Whatever.
Because the debt was cheap in dollar terms.
Exactly. Saylor is doing that. This is what Saylor is doing with MicroStrategy. I don't know if he is consciously channeling Steins
I don't know about him directly, but yeah, he knows what he's doing.
He knows what he's doing, and then so the angst you see on FinTwit and Bitcoin Twitter and all that stuff, or not Bitcoin Twitter, but FinTwit, all the legacy guys
freaking out.
I mean, I didn't go into MicroStrategy when I first started the letter because I didn't like that. I said the miners are a better leverage play on Bitcoin than MicroStrategy, especially because MicroStrategy is now starting to lever up to buy Bitcoin. And then I guess, I don't know, sometime last summer, it kind of clicked into me what was happening. And I'm like, oh, I get it now. So there's three public equities expressions of Bitcoin right now that I've realized from doing this letter for the last 3 years. I can tell you three things about publicly traded expressions of the Bitcoin thesis. That is, spot Bitcoin ETFs trade at par with Bitcoin. Futures ETFs trade, actually, they lose about 5% a month against the spot price of Bitcoin. Public Bitcoin companies like miners, like MicroStrategy, they trade at a premium to Bitcoin. And there are different reasons why they do for each individual company, but that's where you get that additional torque to the Bitcoin price in the public markets.
If you break this, so it's interesting because someone listening to this for the first time, I could see them concluding, I don't know anything about Bitcoin, but I'm an equities guy. I have some money in my RRSP.
Yeah.
MicroStrategy, okay, I don't fully understand all this. I guess this is the way I'll enter. So I can almost see, strangely, that like MicroStrategy is the entry point into the Bitcoin world that maybe orange pills some new people that it really never did before because they can somewhat kind of grasp what you're saying.
Yeah.
Whereas Bitcoin, the asset itself, is like, people don't seem to grasp it. So I wonder if MicroStrategy, you're right, just becomes like, I don't think people are going to enter into the futures market. I guess the spot ETF, if they've heard about Bitcoin enough, but MicroStrategy might do more for orange pilling people than maybe I expected.
I think, if you think Bitcoin is volatile, like, hang on to your brain for holding MicroStrategy, but which is why we actually, not to plug the newsletter, but we have a whole portfolio.
You're allowed to plug the newsletter.
Well, we have a portfolio with allocations, right? So we say, okay, if you got this equities portfolio and you want to use it to get access to this digital asset space, carve out, I mean, we used to, during the bear market, the crypto winter, we'd say 7%, 7 to 10%. Now we're a little higher. We say you can get a bit more aggressive. You can go 15%. I mean, I'm way higher than that.
Like how you rolled your eyes there.
Yeah, like we're, as Raoul Paul would say, irresponsibly overweight this stuff, right?
I'm with you.
So we're not saying do that, because the most important thing in life is that you can sleep through the night without staring at the ceiling, worrying about it. And if that's what you're doing, then you are oversized in your position, right? Anyway, so we got the portfolio, and it's got, the big three, and then it's got a few other companies, and they're weighted. So we say, take this chunk, decide on your allocation, 10, 15%, and buy these companies at these weights. And we even divide that into, split it into three tranches. Say, if you have no position, just whatever the price is today, just buy at these prices and get your initial position. Then we're going to try and time the next couple of tranches, because this space is so volatile, right? You may get a better entry point in a few weeks or a few months, and then as it goes up, we want to add, redeploy those other two tranches at the most optimal places. But the first tranche is just get in the door.
I wonder, so I'm just thinking, like, someone doing this, if they held Bitcoin, some of their Bitcoin, and they self-custodied it and had some savings, then they had some in their RRSP. You're going to have some people who can also sell some of their Bitcoin in the next few years, pay off their house, They can borrow against their house, put it back into their market. And now if they've leveraged the Bitcoin and sold it to our point that like maybe some people will sell some of their Bitcoin.
Yeah.
You can now borrow against your primary home. I'm not saying this is great financial advice at all. I just mean if you wanted to do this, deploy it back into the market, repurchase some Bitcoin, and now it's a tax deduction because the interest on the borrowing of against your home is a tax deductible expense because it was used as an investment. That's how I understand accounting rules here in Canada. I mean, check with your accountant.
Yeah.
But I just feel like the next few years there's going to be a lot. It's like Michael Saylor blew the doors open and is like everything that you ever thought about investing or how you would structure your own finances is just like gone. You know, and for companies like his to be valued on its balance sheet now, like anything I ever looked at with companies before was just kind of like income statement. How much money are they pulling in? What do their expenses look like? Do they make money? Do they lose money? All right. What's the multiple on this thing? What's it being valued at? What's the market cap of the outstanding shares? Like kind of pretty basic stuff.
That's a major point.
Yeah,
actually.
Yeah. But now we have a company that is saying, okay, value me on my my income statement if you want. But check out my balance sheet over here. I got all this Bitcoin. Never really, like how many companies do you know of that really had such a great real estate portfolio, unless they were a REIT to begin with or something specialized that really said, look at my balance sheet? I really can't remember one.
And Bitcoin is a balance sheet play. I mean, that's what I've been saying for years as well. And that's unheard of because to your point, you know, most traditional finance will just look at the income statement because you're on a treadmill and you're trying to outrun the pace of decay of your fiat dollars. It's the numerator and the denominator, right? So you think every economic trade-off is like something in the numerator, which is your asset, over this denominator, which you think is a fixed rate thing. And for the longest time, it felt like it was a fixed rate thing. Except, yeah, there's this little inflation thing and it kind of melts like at this steady amount of time. Now people realize that that denominator is fucked. It's like crumbling into Cantor dust, right? And
that's what I look at as M2 in Canada. That is just fucking retarded.
I know. Every time Jagmeet Singh tweets about grocery store CEOs driving up inflation, I kind of like stick forks in my eyes and I post the picture of... You know, I post two pictures that I use M0 because it just shows the curve so brilliantly. It's like M0 from 2015 and the rate of inflation from 2015, and they follow exactly.
Yeah,
I'm like, where do you think this inflation is coming from? Like a comet from deep space. Like this drives me crazy how stupid they think we are. So the denominator is crumbling. The denominator is going away. And it's getting to the point now, especially since COVID, which was probably the tipping point when central banks globally, you know, jammed 30 trillion in M2 into the global economy. And lo and behold, inflation shows up at the street level. There was always inflation. It was just going into the asset markets. We've been in this equities asset super bubble since 1982, right? And at the same time, we've been in this bond super cycle of falling rates for the same amount of time. That's all over. The central banks are trapped. They don't know whether to raise, not raise, whatever, the cost of capital because there's so much debt in the world. So that basically hoses the denominator. So your income statement is like still there. You still have to sort of make money somehow for most businesses. But then there's this balance sheet, which nobody was paying attention to. And Saylor and people who are putting Bitcoin treasury strategies on their balance sheet just suddenly have this strengthening thing. And that's what they're playing, because what they see coming down the road is this time when that denominator gets swapped out, right? Like, okay, we're not using this anymore. That's over. We're using this now. Okay, this is the new denominator. And it could really be a mixture of this gold and Bitcoin thing, right? This is the new denominator. And that changes the equation.
I wonder if people's perception on yield, because traditional finance now just looks at yield, and that's one of the biggest kickbacks I get from somebody who's never really looked into Bitcoin. They're just like, well, Tom, I'm not really going to buy it because, like Warren Buffett says, I buy productive assets, and what yield does Bitcoin have? And to me, it just means that we have forgotten what money is. Like, when gold was the money, you didn't really worry about the yield on gold. But let me tell you, everybody wanted some gold. If somebody showed up with a few ounces of gold in your village, you were gladly accepting the gold. You didn't say, hey, I don't really want to take the gold. I don't know about
Give me the Hershey bar.
Yeah, what's the yield on the... Yes, exactly. There's no yield on the gold. I'll take the Hershey bar instead. You took the gold. And I just feel like we're in this era in history where through the last maybe 100 years, and that's a few generations, where we haven't had real money. So people don't even understand that you want the best thing, and the best thing is real money, and it doesn't really have to have yield. It's like we've had this gap in our education system and our gap in our memory. And now it's like coming back, and I think traditional finance is going to get hit in the face. They don't understand this. They can't even see it coming. So their talk on yield is preventing them from seeing and acquiring the best asset maybe humanity has ever seen. And it's wonderful because there's people like me out there who are clueless, who have a university psychology degree, who went into tech for a while and started a real estate brokerage, who see it very clearly. And I'm like, shit, if you guys don't see it, I don't care. I'm all on board. And there's people like you who are educating people. And I feel like it's like the revenge of the masses moment,
Yeah, you see that a lot, and it's playing out across the entire zeitgeist, right? Like, because everyone who's sort of keyed to fiat, right, is sort of going down with the ship, and they're not happy about it.
Totally,
right?
yes.
And it's like, hey, look, you've got a whole generation of MBAs and private equity guys who started their careers after 2010, who've never seen a bear market. They don't even know what that is. It's like, oh no, isn't a bear market when the stock market goes down 10% and then the central bank prints a bunch of money? Yeah, that's a bear market. That's what they think it is. And that's actually not going to work anymore. So you basically caught the last iteration of that. I mean, they're going to do it again the next time a crisis comes out. Mm-hmm. But this whole thing is switching, and we're coming out of a monetary aberration, not going into one. I think that's what people don't get.
Agreed. Yes.
It's like, call it since 1971 till now was an aberration in monetary history, right? When the currency wasn't tied to anything. And so we're going into a period now where your currency is going to get tied to something. And then actually that kind of opens the door for the whole CBDC conversation. Because it's either going to be tied to something like Bitcoin, right? Hard digital money, or it's going to be tied to your individual carbon footprint, which is what I think CBDCs are ultimately going to be when they finally hit the door.
And you think CBDCs are still a threat, still a possibility?
They're an inevitability.
You think so?
The only thing,
I thought they were. I feel like the Trump victory was a bit of a timeline shift in my mind, but you think that's just an aberration, and that longer term the system needs CBDCs to survive?
Yeah. I wouldn't even be surprised to see Trump sort of like, did I say that? I didn't really say that. I said, best CBDC ever.
Okay, and where would that be coming from? Because the Treasury or the central bank would say, hey, listen, to keep this system going, we're going to need more control.
If you want ATMs to function in the morning, we're going to need to do a CBDC overnight.
We need that because we need to control the flow of money, and CBDCs help us control the flow of money.
Yeah,
what would be the reasoning?
So it's going to be, I'll caveat it to say the only thing I see derailing CBDCs is if the entire global financial system comes off the rails before they're ready. And then there's going to be this sort of balkanization of like hodgepodges.
A quick UBI or something.
Well, there'll be just different systems spring into life in different places. But if the system holds together long enough, there will be a global coordinated push towards CBDCs. They will be framed as a way to save the earth from the climate crisis. They will be denominated by your personalized carbon footprint. I think it's impossible to just make it compulsory. Like from now on, you can't use any other money other than these. It will have to be incentivized.
So how you get your tax rebates, or how you get your child credit supports, or whatever, your daycare support.
So basically, anyone who's reliant on any government entitlement of any kind, like those will all be converted into CBDCs, and UBI will be a huge part of it. which will happen, has to happen, because whether we like it or not, because just so many jobs are going to be automated out of existence. Yes, new ones will come up, but there's going to be this, how are you going to train a bunch of people? Everything from, X-ray technicians to mid-tier accountants are probably going to be automated away. They can't all become prompt engineers at the same time. Like there's going to be this
prompt engineers.
Yeah, there's going to be this layover time. But they'll use stable coins. They'll use CBDCs. It'll basically be we have to extend the runway on this dollar, on all of our fiat currencies, the euro, the dollar, the yen, the Canadian loonie, all of it.
Okay, so for anyone listening, I think what you're bringing up is such an important point, and I guess I can see the system going to that more centralized control. The way I like to frame it for someone listening to this for the first time, and Mark, you may have heard us say this, maybe even talked about it, but I just want to repeat it for anyone kind of hearing this for the first time, is if globally there's $3 of debt for every $1 of GDP, and if the debt grows at an average interest rate of 4%, that $3 to the $1 of GDP churns after 1 year, when interest is applied to it, to 3.12. For the economy to grow at that 0.12, just to kind of keep some relative pace with the debt, otherwise the debt spirals out of control, you actually need 12% growth, or said differently, 12% inflation for the economy just to keep pace with the debt growth. And no economy is growing at like 12%. Economies can barely grow at freaking 2%. And so they're just going to stuff money into the economy to get the economy or the GDP to grow. And that just kind of makes this whole system somewhat survive until there's a loss of confidence. But where CBDCs come into play is that if the consumer is so indebted and corporations are so indebted that they can't really even use the money that's stuffed in the system, CBDCs can force a business or an individual to say, hey, listen, you better go to Loblaws and you better spend this money that's in this CBDC wallet like tomorrow. Because if you don't, we're not going to make it valid. We're going to make that CBDC disappear.
That expires on Saturday.
It expires, and it's a way for them to kind of keep this vicious cycle that just like creates more and more problems going. So I guess like I can see where CBDCs will just come in, because the math is so completely out of whack that they need another mechanism to force people to spend these dollars. When I say that to you, what comes to mind? Like, you just think I'm out to lunch?
No, it's that, and there's too much debt. We got ourselves into a debt bubble. How do we, keep the money velocity going, which is what you're talking about, of this useless currency that is backed by nothing, tulips backed by nothing, along with ratchet down your lifestyle, all of yous, not the people deciding this at Davos or wherever. We have to ratchet down their lifestyles. We have to force austerity. We have to sort of dig our way out of this debt hole. So we got to keep money velocity going so the system continues to function. And we have to ratchet down everybody's lifestyle because we spent the future already. And that's where the CBDC is perfect for that, because you can, use it or lose it, right? Spend it or it expires. You can't save it. Probably be negative interest rates, which we've seen before. And then, backed by how much red meat you eat in a month and how many.
So if that kind of system comes into play, then you want to own some Bitcoin in a self-custody form, because to me, there's going to be two systems. There's going to be a really locked down system.
Yeah.
And even if you have Bitcoin in that lockdown system, you might have some price exposure to Bitcoin, which might be good for your purchasing power as an individual, and you'll be able to move it in the system. But like real freedom is going to come from just having some self-custody of the Bitcoin directly.
Yeah.
No?
Real freedom is going to cost an arm and a leg. Like it's going to, in the future, it will be a lot more expensive to be free.
And you think this reality comes to form in this way because it's pretty dystopian.
Yeah.
But it comes to because like unlike the 1980s when Volcker raised the interest rates to get like the inflationary pressures in the system out of control, the debt to GDP at that time was like 30 or 35%, whereas now we're at 120% debt to GDP. So we can't play that playbook is gone.
Yeah.
So this is the new playbook.
This is the new playbook. Yeah. CBDCs are the new playbook. Yeah.
Could we not have a CBDC and just do UBI and just mail out the checks? But you're thinking that's too loosey-goosey, that the central bankers are going to want more control than just sending out the money.
They saw what happened under COVID, right? People
they just bought stocks
and and Bitcoin and whatever. It's like, no, we can't have that. So
so this gives them the opportunity to put pressure to send the money where it's at. I'm just checking the price because it's 98.5.
Oh wow!
We're just sitting here. I'm like, are we going to have $100,000 party here?
Yeah, I know. I was saying yesterday, it's like, wouldn't it be amazing if the no confidence vote passed and Bitcoin hit 100,000?
I saw. Was that you who posted that? Okay, yeah. I think I saw that yesterday. Yeah. I'm like, that is the best tweet I've ever seen. That is the best tweet I've ever seen. Take down the government and Bitcoin hits 100,000 on the same day.
Yeah, but it didn't.
Oh my gosh! I don't even.
Maybe we get one today, and yeah.
Okay, so how? I'm curious, just to change our discussion just a little bit. For those people who don't know, Zero Hedge is this website that my friends, and some of them might be listening to this right now. When I used to send them Zero Hedge links 10 years ago, they were like, Tom, what is this website? Where are you getting your information from? But during the great financial crisis, Zero Hedge was my go-to because the mainstream news had garbage on what was going on in the great financial crisis. And I found Zero Hedge. So if you're not familiar, it's like an aggregator of news source, of independent thought leaders and news sources around the world. I don't know if that's a good description of it. And they would put links to these articles all on zerohedge.com. So if you wanted to read somebody like Mark yourself, who had maybe an alternate view from the mainstream, I couldn't really find you. I didn't know where to find you, but Zero Hedge would aggregate it.
Yeah.
And I would get tons of great information. And you would have to do your own critical thinking because some of it was...
Some of it's kind of unhinged.
Yeah, like some of it's literally unhinged. So you still have to have critical thought, but I appreciated that because at least it gave me something to think about. Like if it was an unhinged article, at least it made me question my own thoughts and then revalidate why I thought that was unhinged.
Yeah.
But so Zero Hedge has kind of grown, and I would almost call it now like more mainstream because now in the last few years I send Zero Hedge links to my same friends, and I don't get the text message back that says, I can't believe you're sending me this. They like actually look at it.
Yeah, I get like normie neighbors saying, oh, I saw your article on Zero Hedge.
Oh, do you? Okay.
Private equity. I'm like, oh, so there's another one reading Zero Hedge now.
Yeah. So how did you get on Zero? Like that, like Zero Hedge is a pretty big site to get your articles posted on. How did that come to be? You've told me, and I want everyone to hear it.
Well, they're a EasyDNS customer, and so
and EasyDNS, for those people who don't know, can you explain?
Toronto-based DNS provider, domain registrar, web host, VPS.
I want to buy a domain, or I want to host a website. I can go to EasyDNS, your company, and get all that done.
Exactly.
And you've been doing it since the dawn of time.
1998.
Wow.
Yeah. So we're older than Google by 6 months. Oh my gosh.
1998. Yeah. Do you remember a company in Toronto called Interlog? I got my
I worked for InfoRamp.
Okay.
I was the second employee at InfoRamp, and Interlog were our big competitor.
Oh, they were my internet provider for a while.
Yeah.
When you had to dial up with the modem.
Yeah.
Yeah. Wow.
Yeah, and so you like all of the tech, luminaries in Toronto, you can sort of trace their lineage back to one of like the first 5 dial-up ISPs. So there's like the InfoRamp mafia, Interlog guys,
got it.
The hookup communications and not iStar, they bought them all up, but IO.org, Internex, yes, was the original.
Yeah. Wow. Okay, so you came from that world, and then you started EasyDNS in 1998 because you had the experience and the know-how, and you were pissed about something.
Yeah, we just kept having problems with clients. We had a different company that was building like dynamically generated websites for people, which was kind of nifty at the time. It's
I
like,
remember,
what?
I forgot about that.
Let me get this straight. You're going to do you're going to put my data in a database, and then someone's going to like hit the website and like fill out a form, and it's going to render the page and the thing. It's like, yeah, that's exactly what we're going to do. Okay, but we couldn't get their domain over. We couldn't get the name server switched. So we built this thing, and now you can control this in a web browser. And that was EasyDNS, and that just took on a life of its own.
So how did Zero Hedge become a customer of EasyDNS?
So I was reading Zero Hedge during the financial crisis, and they had some DNS problem one night. And I just reached out to, at the time, Tyler Durden, this pseudonymous writer, had a sidekick called Marla Singer, like from the Fight Club movie. She's an interesting character. She was the tech brains behind Zero Hedge. So she ran the whole tech stack. And I just reached out to her and I said, hey, I run a DNS company out of Toronto. I think I see your problem here. I think I see what's going on. So she just moved over their DNS to us, and we just always kept in touch.
Was it a technical problem, or were they being attacked?
No.
I always felt like, is this site being attacked?
They were a lot.
Okay.
So they have defenses for that. But it was just I can't remember if it was like a combination, but it was like, I can see a way to fix this and just do this. And that sort of put us in touch. And then I was writing, I don't know how my first piece got on Zero Hedge. I just emailed it once to the tips line.
Okay.
I didn't say, hey, you guys are a customer or everything. And then I just, pure fluke, was checking the stats one night, and I see all these links coming in. And I'm like, what just happened? And then I look, it's like, oh my God, I made Zero Hedge.
Badge of honor.
Yeah. And then I just started, sending Tyler my stuff over the years, and he would sometimes post it and sometimes not. And then now he just I think he's on the mailing list, and he just watches my stuff. RSS feed and
cool.
Yeah. I still don't know who Tyler Durden is.
You don't?
No.
So you have no direct contact. Someone's paying the bills, though.
Yeah,
Someone's paying
for sure.
something.
Someone is. It was funny because I really wish I screen grabbed it. I saw like a conspiracy theory on a website that said that I was the secret owner of ZeroHedge.com.
Oh, really?
Yeah. And it was just by they're looking at the Who Is records, and it's like, oh,
your name popped up somewhere.
I'm like, yeah, it's because we're a domain registrar. Like, our address is on like a few 100,000 Who Is records, but anyway.
So I'm not sitting across from Tyler right now, is what you're telling me.
You are not.
Never know.
Categorically.
No, the first rule of Fight Club. When do you think Canadian bank? As you went through the days of dial-up and easy DNS, that was kind of the era to me that the telecommunication companies were losing control of their grip on landlines in Canada. And if it wasn't for the iPhone, I feel like in the 2000s, when they started selling data instead of landlines, I feel like they would have all just died.
Yeah.
But the iPhone basically saved our ass, because when the iPhone came out, and then I think it was Steve Jobs or whoever there said, hey, we're going to sell data. You're going to make money on this thing by selling data, because this iPhone is basically a computer in everyone's pocket. And who cares about the phone line of this cell phone? It's really just a data generating machine. You sell data and you're going to make big money. And the phone companies luckily stumbled into that. I don't feel like it was strategically. I feel like it was like a Steve Jobs thing that kind of sort of saved them.
It was that and Netflix. Right.
And Netflix.
You're going to change your pipes. Your pipes are no longer going to carry conversations. Okay, so your pipes are going to move ones and zeros.
So with that in the background, and so then they did, and now they all sell data, and they're all big in Canada. We have a monopoly of these companies. It's ridiculous. But do you think the Canadian banks just stumble upon their own success? Nick and I were kind of debating a little bit, and I was like, I don't even know if they're going to survive, because as Bitcoin changes into the collateral of the system and bonds kind of lose their hold, some of these banks are going to misstep. They won't catch it, and they're just going to die. But the Canadian banks are so big. Maybe Nick was defending them, and maybe he has a point that some of them will just be regulated to hold Bitcoin as collateral, and they'll all just move from using bonds and real estate as the collateral of the system to now incorporating Bitcoin into the system. And they will now use if you, Mark, show up with a bunch of Bitcoin one day, they're going to lend against the Bitcoin, and maybe there's going to be some multi-sig custody of the Bitcoin. How do you think the banks evolve? Do the Canadian banks specifically, do they survive the next 5 years? Or is there going to be, or are we on the precipice of a major change and we just don't see it?
Yeah, I was looking up the market cap of Royal Bank. I just wanted
Okay.
to see what it was for this conversation. So I think the banks are, for the most part, like completely oblivious. Like they're really dealing with banks in Canada has got to be the most frustrating, arcane, like
Even the employees make fun of the systems. I was just at the bank the other day wiring. They were making fun of their own system.
Yeah. So I made a graphic once in the newsletter that I sort of like, I saw some article of some, like a graphic of like an infographic of all these bank logos from whatever, some conference or something. I said, this is what it is today. Someday it's going to be this. And the icons were like Stripe, right? Coinbase, Marathon Digital, MicroStrategy, right? Like
Cantor Fitzgerald and
Block.
Yeah.
Like it's going from this. These are the buggy whip companies to this, right? So right now, Royal Bank, it's still pretty big. They're like 249 billion market cap.
Okay, and that's our biggest bank, I think.
I think so. Yeah. Coinbase is an $80 billion company. PayPal is an $80 billion company.
Geez.
They're about, Stripe is about, they're all about the same size because I was just looking at them last issue, right? They're the sort of big payment provider gorillas. They're all coming at payments from different angles, right? And it's like, right, those may be the big three banks, right? MicroStrategy, like I don't see banks moving at this fast enough. Their systems
are so archaic. I'm sure they're still using mainframe computers downtown.
Oh, man.
I'm positive of it.
We were trying to get Easy DNS set up in like online bill paying.
Okay.
Actually, we are still trying to get DNS set up in the online bill paying, right? So like you can just go in and pay your invoice through there. And I remember getting the paperwork. So I got to fill out a form and it's like, no, you must own it. You must have a fax machine to use this system. And I'm like, yeah, I'll see if I can dig one out of the back of my garage. You know, It's like, this is crazy.
And that's why I don't know how they make this system to like not instant settlement, but quick settlement of a new bearer asset on top of this archaic computer system that they haven't modernized.
I don't see it happening. So it'll be.
And all the real estate that they own that's unnecessary, like all the bank branches that they own. Are you really going to, once that older generation that just wants to go in and pay their bill in person is gone, and let's face it, they're going now. Those people are dying off. Why do you need these branches?
And the only time I go to a branch is when I'm like compelled to go there. It's like
you're pissed.
I want to deposit a US check business and it's not working in the bank machine because I can't do it on the phone app, right? Oh, you have to go to a teller. It's like, okay, well, can't you do this? No, I'm not.
You know what?
a teller. There's no tellers.
I used to have an affiliate website on digital cameras, and I would get these U.S. checks sent to me from the States. This is like 2004, and I used to work at CIBC in the 1990s, so I knew what they would do if you got a deposit that was messed up. It was the teller, whoever was clearing out that ATM, that would like have to fix up the problem. So I would just go when I didn't have time. If I had like a $500 U.S. check and I had a Canadian bank account, I would just put it in at like whatever the exchange rate I thought was. So I would just type in like, I don't know, 725, and I would just deposit it knowing that it was just a disaster of a deposit, but someone on the back end was going to be pissed at me, but they would go and have to correct it because they had to balance their books. So that was my little hack and I wouldn't recommend that today. It's probably way more automated and it'll just be kicked back in your face. But remember when you put the checks in the envelope before? Yeah. That's how I got around that. I just jammed it in, just an invalid deposit that they would fix.
Yeah, and then you get the postal mail like a week, 2 weeks later.
With the correction.
That says this is how.
Yeah, and I remember looking at it. I actually absolutely did get that. And I'm like, oh, really? That was the exchange rate they use. Okay, next time I'll take that into my calculations,
So if they have any brains, the banks will invest in these companies, so they'll own pieces of them. I think.
Okay, so that's how they'll that's how they'll save themselves.
The banks will go like Bell Canada.
Smart.
Is kind of like what has Bell been doing, right? Like Bell, they've just been buying up shit.
Yeah. Bell Mobility used to be a separate company, I think.
Yeah, so that they just own other companies. They just own other brands.
Vitalis.
I think that's what the banks will start doing. They'll turn themselves basically into bank holding companies.
Yeah.
Because that system can't be saved. Right.
Agreed.
And it's just being disrupted out of existence. And
How many years are we away from me in Canada being able to use my Bitcoin as collateral and borrow some fiat against it?
You already can.
With?
You would talk to someone like Aladdin.io. Our good friend Maurizio can probably set you up. I don't know if there's if you have to be an accredited investor or something like that, or what the
No, I think I was just looking at it. I think the minimum that they would do and lend it was like $1,000 worth of Bitcoin, and they were going to lend you fiat against it. The rate was like 13 or 14% or whatever. But it's happening.
It is happening. I imagine that rate may come down over time. We'll see. What I'd like to see is the loan to value come down from 2 to 1 to maybe even like 1.5 to 1 would be a little more, make it a bit more of a no-brainer to say, hey, I want to buy this rental property or do this acquisition. It's going to take my bank financing like 3 months to do this deal. So in the meantime, I can just collateralize some Bitcoin, get the deal done today or tomorrow, pay interest only on the Bitcoin, and then, when my legacy financing comes through, you cash out that loan and bring it all back.
Everything we've discussed today about the eventuality of CBDCs, does any of that change that, in 2025, I would pray that we're getting an election? I don't know, unless there's a dictator declared here in Canada and we get an election. I shouldn't even say that jokingly. I
know.
The probability doesn't feel like 0 at the moment. But anyway, we're getting an election in 2025, knock on wood.
Yeah.
And there's a conservative win in there. Does any of that change the eventuality of CBDCs for you?
I don't think so. I mean, for one thing, the Bank of Canada is doing this on their own anyway, right? It's not like the Trudeau government told them to do it. It's just kind of like they're just going with the flow. And I think that tempo is being set by the Bank of International Settlements, right? They're kind of like running that playbook across all the central banks of the world. Situations is a little different in the US. I still think CBDCs will happen there, but because they're so fragmented and balkanized, which is good in this case, it gives the rest of us this runway of like getting our financial affairs in order.
It really does.
Breaking out our sovereign individual playbook and just like being ready. Right. Sometimes I see this fear porn on Twitter of like, on Thanksgiving 2024, they're going to close the bank, declare a bank holiday. We're going to wake up on Monday.
Oh, I've read about that since 2008.
There's going to be CBDCs. And I can tell you, from where I'm sitting, and I write about CBDCs every month in the Bitcoin Capitalist. We have a whole section, Eye on Evil Coin. We are just following those developments. They're not ready. That can't happen. Martin Armstrong's one of those guys. I love his.
I know the name.
He was right about, he predicted the 1987 crash to the day.
Okay.
And he hasn't been right about anything ever since.
Got it.
Now I'm going to enrage some of your listeners, but no, he's good. He was in prison for a while for contempt of court on a really weird charge. And he used to write these like samizdat style PDFs on the prison typewriter, and they got circulated out. And then, they were really.
God, I think I remember that.
Yeah, really great stuff. Yeah. And actually,
I think I remember reading some of that.
He's
stuff.
pretty high powered. Like he used to advise Reagan and Margaret Thatcher, and he's no question an incredibly intelligent guy. But he is prone to put out these hyperbolic alerts of like there's going to be a banking holiday and they're going to do the CBDCs. It's like they're not, because the CBDCs aren't ready yet. Thank God. I do think that something like Ethereum or something like Ripple is going to be used as the base layer for CBDCs just because they're running out of time.
Got it. So they can't build their own infrastructure. Grab one of these other ones that are out there.
And they want to do it. Like those projects, Ripple expressly sells themselves as a CBDC.
Oh, do they? I pay so little attention. I looked into Ripple years ago. I was like, I don't know what this is. And I just moved on.
And some of the Ethereum Foundation have done the same. Like one of them, I can't remember, the guy who founded Consensus, I think, the co-founder, he like went to a Davos meeting in like 2018 and said like, hey, we're your team for CBDCs. So we call it.
So the project that I understood was started as Global Computing for Freedom is now pitching itself as an opportunity to be the base layer of a CBDC.
Yeah.
Awesome. When do you think a CBDC would like come in? When will the banks be ready? Like, are we looking at 3 years, 5 years?
2030, maybe 2030.
Oh, that long?
20. Yeah.
Okay.
I think it's a ways
big
off.
project.
Yeah.
Okay.
I mean, unless like if something's...
I shouldn't say that. 2025 is next year. That's like 5 years.
Yeah.
For some reason, I'm thinking we're early 2020s.
Yeah.
Yeah. Okay.
I mean, we could see sort of baby steps toward it, like 2027, 2028. We might see stable coins sort of getting more melded together with the traditional banking system. That could happen pretty quick.
Or just a Canada app that starts as like your digital passport or ID.
Yeah.
You know, I could see something starting like that. Like
Arrive can.
Like an Arrive can, like that one looks like it's just so political now that nobody really wants to touch that. But like that, yes, where it's like you have this app for Canada and it seems kind of like everyone likes it because of the convenience of getting through the airport. You got this QR code, I don't know, on your phone through this app. And then eventually that app just adds on this little feature that is like, hey, if you want your money, you have to use this app. Yeah. Because we're all just tapping QR codes and scanning things at the grocery stores anyway. So how difficult really would it be to have that app, the national or federal app from Canada, be the thing that gave you some government dollars? Shit, I feel like I'm like in Chuck E. Cheese or something.
Loot
government
coins.
dollars.
Yeah.
Dave and Buster's coins.
Yeah.
Here you go. I mean, you can kind of see it. But so then how are you preparing for yourself for that? Like, it's obviously, to me, you're a sovereign individual. Like, you think for yourself, you critically think, you're putting out the Bitcoin Capitalist and sharing some of your thoughts. Is there something that you're doing even with your own mindset or your own personal self to prepare yourself for the next few years?
Yeah, I try to, diversify my financial, infrastructure. So I have the main business that's EasyDNS. I have the newsletter business. I've got a couple other things going. I have a little audiobook business. Thanks to you guys, I'm going to start investing in real estate. And
we got you all backwards.
Yeah.
We're investing in Bitcoin. You're investing. We're reversing roles. We're reversing roles.
It's good because I just think, I think it's that part of that diversification strategy. And plus I got a daughter in university, so I got to put her into something, right? So, I'm doing that. A lot of it is also mindset. Like I catch myself on doom scrolling on Twitter too often and everybody is pissed off and everybody is like hyperventilating about something. Even the people on our side will put it, are like hyperventilating about something that, and I'm just like, this is just draining my energy, right? And I've got this framework that I'm actually trying to build up in my head that's basically like stop whining, start winning. Right? Like just turn off Twitter, stop paying attention to this, which is impossible for me because I actually have to monitor it for developments. I get my news faster from Twitter.
Oh, sure. Absolutely.
So you have to sort of like start creating these like mental frameworks to just tune stuff out, not get wrapped up in it. And just basically cultivate a mindset of, all of this stuff aside, it kind of goes back to that anxiety I was talking about at the beginning of the show. That anxiety of not being able to get my arms around the entire opportunity, right? Is that we're headed into this it's an amazing time to be alive. It really is. It's like Bitcoin in the sense that we're up only, right? Like humanity as a whole is improving across almost every measurable metric, right? Including things like environmental and ecological concerns. Like people who are telling you the world is going to end in 5 years are kind of like delusional and not looking at the data. So everything is getting better, but everything is getting more volatile. So it's like the price of gold during the Weimar, and it's like Bitcoin. It's going up only, but it is like you're getting sucker punched every 3 steps. But it's a great time to be alive. And I try to latch on to like, oh, this is like, there are more solutions for every problem we're facing than any other time in history. But it's easy to get caught up in the doom and gloom.
Totally. Yeah. I'm just thinking about you going into just thinking about you with Bitcoin and AI that you're talking about. Now you mentioned real estate. Imagine, and I guess this is going to sound dystopian. I don't mean it to, but I just mean you have to be prepared for a changing world, because how far away are we from an AI that earns Bitcoin in some capacity?
That's already happening.
Okay. So forms a corporation in Ontario. AI
that hasn't happened.
That hasn't, but forms a corporation in Ontario, but then has the purchasing power to buy a property and rent it out. And somebody's going to be paying for that property in rent, and the landlord's going to be AI that legally owns that property in Ontario. Like, are we ready for that world?
I know.
Like, it doesn't seem like, I know
you're going to be bidding against an AI for this rental property.
Like, I mean, is anyone ready for that world?
No.
It doesn't seem like the probability of that happening in my lifetime is zero. It feels like the probability of that happening in my lifetime is quite high.
I mean,
there's a South Korean company that has AI on the board. There's a board seat for one of the AI, and they actually gets a vote on the board.
Yeah. And Brian Armstrong, is it Brian Armstrong or Brad Armstrong?
Brian.
CEO of Coinbase. He reported, I think maybe 2 months ago now, that they witnessed their first AI to AI agent transaction on Base.
Yeah.
And then, have you been following the Truth Terminal story?
No.
So Truth Terminal is an AI Twitter bot that comes from this infinite backrooms, where this guy, I forget his name, he's got these LLMs talking to each other.
Okay, I think I do know about this. Okay, yeah.
And then so Mark Andreessen seed funded this guy with 1 Bitcoin, not this guy, this thing with 1 Bitcoin, and it invested into the GOAT meme coin. Don't look up GOAT. It's a horrible meme. But the meme coin then, like, it's $1 billion market cap now. And when Mark Andreessen was talking about it, like 4 days after this thing made its move with its seed money, it was $300 million. So, I mean, that's the world we're living in. You got to, if you want to know where we're going.
The AI can take that money, hire a handyman, hire somebody in the real world. So AI can have a physical impact in the real world.
Yeah.
Because if it has purchasing power, it can hire people to show up at your door. And, I'm saying in a positive way, and do services and do all kinds of, like, if it owned the property, it could physically, there's a app called Jiffy that has like access to roofers and plumbers and everything. It can interact with that app, hire a roofer to show up at your door to fix the roof. Yeah. You have no clue behind the scenes. It's AI doing all of this stuff.
Yeah. Yeah. It's like that X-Files episode that was written by William Gibson, right? Where it was just that trailer parked in like a fenced off power grid thing that was doing,
Mark, if anyone wants to find the Bitcoin Capitalist, can you handle, what's the best way? The URL?
Yeah, I'd start at bombthrower.com. Just get on the mailing list, get the copy of the Bitcoin Capitalist Manifesto. And then I'm working on another book called The Dollar Prison. That's the CBDC survival guide. So I'll send out a bit of that when it's finally done. And then the bitcoincapitalist.com is the one for the newsletter. And then if you want a website, domain name, DNS, VPS,
easydns.com.
Well, .ca, .com, almost anything.
You got them all. You're in the business.
Yeah, I know a guy.
You know a guy. I remember sending you an email and you're like, I'm like, I don't want to like clog your email box. And you're like, I'm in the email business. I love email. Send me an email.
Yeah.
Mark, thank you for this, man. I always really appreciate chatting with you and taking the time to come in and dragging you over to Oakville to do this.
It's great. It's always a pleasure to be here. Thanks.